Welcome to the Deep Dive. We're the show that takes all the complex source material, earnings calls, reports, you name it, and boils it down to what you really need to know.
That's right. We cut through the noise to get you up to speed quickly.
And today we are plunging into the Agilysys fiscal 2026 first quarter conference call. So that's covering April through June.
Yep. And our mission really is to unpack the key numbers, look at their sales momentum, which is pretty significant, check out their strategy, and get a sense of management's outlook.
Exactly. There's quite a story here, I think. Lots to unpack.
Definitely. If you want to understand not just the what, but the why behind Agilysys' recent performance and where they might be heading, well, this is the place.
Okay, so let's kick off with the headline numbers, a quick snapshot. Agilysys had a really remarkable quarter. Record overall revenue, $76.7 million for Q1 fiscal 26.
And get this, it's their 14th consecutive quarter of record revenue. Just think about that consistency.
It's pretty impressive. That's a 20.7% increase compared to the same quarter last year.
But the real story, I think, the engine behind that number, is the subscription revenue.
Oh, absolutely.
It just surged, up a staggering 44% year over year. I mean, that's clearly driving the bus here.
It really is. And it speaks volumes about their business model shift, doesn't it? Moving from those one-time sales to predictable recurring income.
Exactly. A lot of companies in this space, sort of legacy players, they struggle with that transition. Agilysys, though, they seem to have really figured it out. It's becoming a major differentiator.
Now, there is a little nuance on profitability we should touch on. Q1 profit came in a bit lower than their annual goal.
Right. But they flagged that, didn't they? Said it was due to some one-off costs. The big one was their user conference.
Yeah, exactly. Think of it like a planned investment, right? A big marketing push, customer engagement. It hits the P&L short term, but it's strategic.
And they sound very confident, reiterated confidence, actually, in hitting their full-year target. That's 20% adjusted EBITDA. So it wasn't a sign of trouble, more like a calculated move.
So despite that temporary dip, the overall message from the call was definitely one of strong sales momentum and, positive strategic shifts moving forward.
Yeah, it suggests management's playing the long game, right? Prioritizing growth, market position, even if it means a slight hit in one quarter, which kind of leads us to the next question.
How sustainable is this? And what's really driving it?
Exactly.
Okay, perfect lead in. Let's dive deep into that sales momentum and the growth drivers, because honestly, the performance here was exceptional.
It really was. Q1 sales were their second best quarter ever. Only Q4 of last fiscal year was higher, and that was their all-time peak.
And specifically for a Q1 period, April to June, it was their best ever, up 24% from the previous year's Q1.
And if you look at the last two quarters combined, so Q4 25 and Q1 26, sales were 19% higher than the 6 months before that.
Wow.
And digging into the recurring revenues, specifically the SaaS and the annual maintenance bookings, those were up 34% compared to the previous 6 months. That shows real traction in shifting customers to that model.
So it's not just overall growth, it's growth in the right areas for their strategy.
Precisely.
What about specific verticals? They mentioned it was a really broad success this quarter.
Yeah, they call it their broadest and widest sales success ever, actually. Most areas did very well. Food service management, FSM, that was a big one.
Right. That had been a bit tough for them previously, hadn't it?
It had. Late fiscal 24, early 25 were challenging. But this quarter, best sales for FSM in 2.5 years, a real turnaround. They said POS sales there are, quote, back in full form.
That's significant. What else stood out?
International sales had their second highest quarter ever. So good continued momentum there, especially, it seems, with larger deals involving multiple products.
Okay.
And casino gaming, best Q1 ever for them, up 15% from their previous best Q1.
What's driving that in casinos?
Seems to be customers buying more Agilysys products, basically expanding their footprint and investing in, modern software to improve the guest experience, operational efficiency.
Makes sense. They mentioned the boy gaming deal, right? A subscription POS deal.
That's the one. A good example of the trend. And don't forget, professional services sales there were up 20% year over year. Second best services quarter ever.
And that's important because services often lead to future subscription revenue, right? They implement the systems.
Exactly. It's often a leading indicator. You install it, then the recurring revenue follows.
Okay, so this all feeds directly into their cloud transition and product strategy. And that seems to be absolutely firing on all cylinders.
No kidding. Best quarter ever for subscription software sales. By a wide margin, too. up 25% just from the previous quarter, Q4 25,
Wow, quarter over quarter growth like that.
and up 79% from Q1 last year. It's their fourth consecutive record quarter for subscription sales. That's not just growth, that's acceleration.
And are they winning new customers too, or just upselling existing ones?
Both, it seems. They added 24 new logos in Q1, excluding some smaller book-for-time deals. And crucially, all of them signed subscription agreements.
All of them. That's telling.
Very. And the deal sizes were strong. One of their highest quarters for total annual contract value from new wins. New customers bought an average of 6 products each.
6 products. That's quite integrated from the start.
Yeah. And the PMS deals, the property management system ones, averaged as high as 14 products. So they're landing bigger deals right out of the gate.
That really speaks to the power of their integrated ecosystem strategy, doesn't it?
Absolutely. They've invested heavily in making all these products work together. Yeah. And they said that's becoming a fast-growing differentiator, a key reason they're winning deals.
And that interconnectedness, that data, that sets them up perfectly for AI. Right?
Exactly. That's the foundation. Their modernization work, this integrated ecosystem, it makes adopting and leveraging AI much easier, much more effective than for competitors maybe running older siloed systems. They think it's creating a serious, widening competitive advantage.
And they're not just talking conceptually about AI. They listed specific enhancements they're adding?
Yeah, quite a few. Things like personalized upselling, using a dynamic PMS engine suggesting room upgrades based on real-time occupancy, loyalty, past behavior.
Smart.
AI-assisted concierge services, AI for natural language processing, AI helping book guest-specific amenities or itineraries.
So really touching the guest experience directly.
And also operational stuff. AI driving pricing decisions based on demand, AI for conversational food ordering, AI helping fulfill guest requests, even building AI agents for data analysis right within the customer's property.
That's quite comprehensive.
It is. And it's not just customer-facing. They're also using AI tools internally.
Ah, interesting. How so?
Across the board, really. Product development, professional services, customer support, using virtual assistants, sales, marketing, IT, security, finance, legal. Basically using AI to boost efficiency and quality everywhere inside Agilysys.
That internal piece is clever. It can give them real operational leverage, make them faster, leaner.
Exactly. It often gets overlooked, but it can be a significant advantage. Better efficiency, better service delivery. It all helps.
Okay, let's pivot then. Let's dig into the financials and the outlook a bit more, beyond that top-line revenue number.
Right. So focusing on subscription revenue again. Organic growth there was 24% year over year.
And how did that break down?
Driven mainly by PMS and related modules, they were up a huge 48%. POS and its related modules grew a solid 16%.
Okay, and they expect that POS growth to pick up.
Yeah, they specifically said they expect POS subscription growth to accelerate based on the recent sales wins and how quickly they're getting things implemented. So that's a key forward-looking point.
Good to know. And overall recurring revenue, subscriptions plus maintenance.
Hit a record, $48.6 million. That's up 28% year over year. And it now makes up 63.4% of their total revenue. So nearly 2/3 is recurring.
That's a significant threshold.
And within that recurring bucket, subscription revenue itself was also record 65.6% of the total recurring. The shift is clear.
What about the maintenance piece? Is subscription growth eating into that?
That's what's interesting. No, it doesn't seem to be. Annual maintenance revenue also hit a record. It was up about 5% year over year.
So they're growing both.
It looks like it. It suggests the subscription wins are mostly net new business or expanding existing clients, not just cannibalizing the maintenance base, which is, very healthy. Dual growth.
Definitely healthy. And implementations, are they getting these deals installed quickly? Because that's when the revenue actually starts flowing.
Seems so. Q4 last year and Q1 this year were their two best ever quarters for implementing subscription projects measured by the annual recurring revenue, the ARR they installed.
2 best quarters back to back.
Yep. And the amount of subscription ARR they installed over the last 6 months was 47% higher than the 6 months before that.
47% higher. That's massive implementation momentum.
It is. They said both sales and implementations are running ahead of their own initial expectations.
Which naturally leads to guidance. Did they update their outlook?
They did. They raised the guidance for full-year subscription revenue growth. Originally, they said 25%. Now they're guiding to 27%.
Okay, a nice bump based on that backlog and momentum.
Exactly. But they kept the overall annual revenue guidance the same, still $308 million to $312 million, And they reaffirmed that 20% adjusted EBITDA target for the full fiscal year 26.
So more subscription revenue within the same overall range and still hitting the profit target. It implies confidence in managing those moving parts.
I think so. It shows they feel they can handle the investments needed for that subscription growth while still delivering on the bottom line promise.
Let's quickly look at margins. Gross profit margin was 61.7%, slightly down from last year's 62.8%.
Yeah, they attribute that to a couple of things. Lower margins on some of that one-time revenue and the costs of ramping up new hires in professional services, basically investment in people.
Makes sense. And sales and marketing expenses looked higher.
They were quite a bit higher as a percentage of revenue, 14.7% versus 10.5% last year. But again, that user conference was the main driver.
The Q1 timing effect.
Exactly. They expect that percentage to drop back to around 13% for the full year, which is more normal for them. So not a structural cost increase.
Okay. Balance sheet. Cash position.
They ended the quarter with $55.6 million in cash and marketable securities. Q1 is usually a lower cash flow quarter for them just due to working capital timing.
Right.
But here's a really significant piece of news.
Oh.
They paid down $12 million on their credit revolver before the quarter ended in June, and then paid off the remaining $12 million in July.
Right, so they're
Debt-free.
Yeah.
The company is now completely debt-free.
Wow, that is a major milestone, especially for a company still investing heavily in growth.
Huge. Gives them enormous financial flexibility. Now, free cash flow was negative $5 million in Q1, but they expect that to normalize and turn positive in the second half of the fiscal year. Becoming debt-free is the big headline there, though.
No doubt about it. Okay, one more specific update people always ask about, the Marriott PMS project. Any news there?
Yeah, they said it's continuing to progress well. Lab testing of all the integrations and connectivity is apparently almost done.
So next steps.
Implementation at a few test properties is expected to start in a few months. But, and this is important, they reiterated that no significant subscription revenue for Marriott is baked into this fiscal year's guidance, FY26.
Right. So any Marriott revenue this year would be pure upside to the numbers they just guided to.
Correct. Something for you to keep in mind as you look further out.
Definitely. Okay, let's try and pull this all together now. Put it in context for investors. Highlight some of the strategic insights.
Sounds good. One key thing is the sheer expansion of their go-to-market capacity. Global sales staff, the quota carriers, up about 45% year over year.
45%.
And global professional services staff up about 38%. They've really staffed up, especially in hotels and resorts, and they've added a new inside sales team.
Which lets them just knock on more doors, basically.
Pretty much. Expand territory coverage, improve sales discipline, and they mentioned there's still room for productivity gains from these newer hires. So that's another potential lever for growth.
And internationally, what's the key driver? Why are they winning those big deals?
It really comes back to that integrated ecosystem. They feel their suite of products, all working together, is almost unrivaled globally for those larger, complex deals. The focus now is turning those wins into referenceable customers to keep the momentum going.
Makes sense. And the whole go-to-market structure seems more mature now.
Yeah, they seem pleased with how the sales structure is performing and plan to keep expanding it. Plus, they're ramping up marketing, more investment, bigger trade show presence, more thought leadership content, it's a more concerted push.
What about that Book for Time acquisition? How's that fitting in?
Still early days, they said, but it's proving useful as a way into existing customers who maybe don't use other Agilysys products yet. It's an entry point for cross-selling.
A smart land and expand tactic.
Seems like it. And finally, that investment philosophy. They were clear. They won't sacrifice long-term growth opportunities just to boost short-term profit numbers.
But they're still confident in the 20% EBITDA target.
Yes. It signals a commitment to keep investing, especially in things like AI and product development, but within a framework of financial discipline. A balanced approach, you could say.
Okay. Time for our This Is Not Financial Advice segment, where we toss out an outrageous but plausible trade idea just for discussion, based purely on what we heard in the call.
All right, let's hear it.
So given everything we've discussed, the strong subscription growth, the cloud shift clicking, the AI investments, becoming debt-free, maybe, just maybe, an aggressive long-term option strategy on Agilysys could be interesting. Purely hypothetical, of course.
Okay, long-term options. What's the angle? Out of the money calls.
Exactly. Place some out of the money calls, maybe 12 to 18 months out. The idea at the play is that the market isn't fully appreciating the compounding effect of all these things.
You mean the bigger sales team getting more productive, the faster implementations turning into revenue quicker, the AI features creating a real moat, that kind of thing?
Precisely. The market might be underestimating how all that layers together. And the outrageous part.
Here it comes.
You're basically betting on the Marriott PMS project hitting sooner or bigger than the market currently expects for FY27 and beyond.
Catching the street off guard.
Right, because management says it's progressing well, but they've explicitly kept significant revenue out of this year's guidance. If that starts contributing meaningfully earlier or faster than anticipated, well, that could really move the needle.
It's definitely a swing for the fences idea, banking on that specific catalyst, surprising people, on top of the existing strong execution.
Hence, outrageous but plausible. It relies on a few things falling into place perfectly.
Okay, so let's recap. Agilysys put up a really impressive Q1 for fiscal 26. Record sales, soaring subscription revenue, the strategic shift to the cloud looks successful, and they have a clear plan for using AI.
Yeah, the investments they've been making in sales capacity, in modernizing their products, it seems to be really paying dividends now.
So what's the takeaway for you, the listener? Agilysys is executing strongly on its plan to be a major force in hospitality tech. They've built this integrated, cloud-based, AI-enhanced platform.
And the big question, maybe, is how quickly they can translate these investments and this momentum into truly dominant market share. And what does their innovation mean for everyone else in this space? Something to think about.
And just to reiterate, this deep dive, it's purely for informational purposes. It is definitely not financial advice. Always do your own research.
Absolutely. So what stood out to you from the Agilysys call? Do you have more questions about their strategy or maybe about the broader hospitality tech landscape? We'd love for you to continue the conversation.